if there wasn't that sudden inflow. So this began in March of 2020. If that hadn't happened, the amount of gold on the COMEX would have fallen to zero very rapidly. And by falling to zero, it means there would have been a force majeure, and then nobody knows what the price of gold is. A force majeure, the COMEX would have changed the rules, and commodities contracts for gold, futures contracts, would only be settled at that point in cash. You would not be able to take delivery of gold because they don't have any. It's a fractional reserve scheme. Hi, this is Mike Maloney, and I wanted to give you an update of Chapter 9 of my book, The Great Gold and Silver Rush of the 21st Century, because I believe that I uncovered something very important that was supplied in data that came from Nick Laird of Gold Charts R Us, and it's the greatest manipulation of gold in history. And it was right in everybody's faces, but it seemed like nobody saw it. And so Chapter 9 was titled, Somebody Big is Getting Ready for Something Really Big. And this was at the outbreak of the pandemic. Everything changed at the outbreak of the pandemic. In a video a couple of weeks ago, I showed you all of the transparent gold holdings. So this is simply the published repositories, mutual funds, and ETFs, the number of ounces that each of them hold. And Nick Laird, if you're out there, I'd really love to see this, or maybe we will do it here. I'll get the data from Nick Laird and we'll update this later and show you. We'll put COMEX on the top, because what it does by putting it on the bottom is all of these have that same jog that the COMEX has. And most of these are just the number of ounces that they're holding just changes very little at a time, not that sudden, huge. And this is the manipulation that I was talking about. And so in the book, I talk about these gold flows and I show these. There's a couple of charts. Now, this chapter, I was just going to call a special insert and not even call it a chapter. But it was so important that I felt that I had to put it in. And it's only 4 pages long. That's the whole chapter. Very easy to read. And in here, I showed these charts, and this is all data from Nick Laird of those public depositories, the publicly reporting depository, transparent gold holdings. And it shows this sudden inflow of gold into the commodities exchange. And if there wasn't that sudden inflow, so this began in March of 2020. If that hadn't happened, the amount of gold on the COMEX would have fallen to zero very rapidly. And by falling to zero, it means there would have been a force majeure, and then nobody knows what the price of gold is. A force majeure, the COMEX would have changed the rules, and commodities contracts for gold, futures contracts, would only be settled at that point in cash. You would not be able to take delivery of gold because they don't have any. It's a fractional reserve scheme. And what would have happened when they went to zero is anybody that actually did want physical gold would have had to go out onto the market to dealers such as me and try and source it through us. What does that mean? That would have meant 5,000, 10,000, who knows what the price of gold would have peaked at, because of that force majeure. And so there was emergency maneuvers, and the powers behind this are incredible. Because what happened is normally China is one of the largest, they are the largest importer of gold in the world. And now this is their imports, not their imports and their exports. So imports minus exports is the net. I'm going to show you, I was able to create that. These are Nick Laird's charts. But you see that suddenly with the pandemic in April, through April of the following year, pretty much, March to March, they pretty much shut off. In fact, when you include the gold exports from Hong Kong, these are just imports of Hong Kong and Shanghai exchanges combined. When you include the exports out of Hong Kong, this area actually goes negative, and you're going to see that in a moment. Now, is that because of the lockdowns? Is that because, well, maybe the trading was limited because all of the traders were locked down? Well, here's silver over the same time period. And other than this big outlier month back in 2017, you see that there's a peak in 2017 and a big peak, and it's even higher, except for that one outlier month in 2020, mid to late 2020. And so if we also look at the refineries, the Swiss gold refineries are the refineries that create the most commodities exchange register or eligible bars, where it's the bars that are traded on the commodities exchanges have to be from certain hallmarks, certain refiners, and it has to be a certain purity to meet the specifications. And so gold goes, this is Swiss gold imports. So it's what's being imported to Switzerland. And so it's being exported. And a lot of months, the US is the major supplier to the Swiss gold refineries. So this is coming out of the United States, going to Switzerland. And then where does Switzerland ship that ore and whatever else, lower quality bars that aren't the right hallmark, once they get melted down and re-refined and they're in a brand new bar made by Credit Suisse or Pamp Swiss or one of the other Swiss refineries, where does it go? It all goes to China. They're the largest importer of gold in the world, but people forget that they are also and Alan Hibbard just did a great video on the gold going from west to east and the explosion that is happening in China. But they are by far the world's largest gold producer. Here's the US at 170 tons, China at 370 tons, but that gold typically does not leave China. It stays there. And so when it comes to like the accumulation of their central bank, they're reporting figures, and people try and calculate, well, how much gold do they really have? Are they telling us the truth? And what they tell us is the amount that they have that would be possible from the amount that they're importing. This could also be going largely to their central bank stockpile of reserves, and they may or may not be reporting it, because we see in their reports that they don't report for several years, and then they suddenly report this new amount, and then they don't report for several years. And so anyway, I want to show you some charts that Alan just made for me this morning. What we've done here is we've taken imports minus exports, so you get the net of whatever. So this shows you the actual flows. So we've combined basically those charts I showed you of Swiss gold imports and exports are all of the different countries for just 1 month on that chart. And I wanted to see the whole history of the US versus China. And so we took the imports minus the exports, which gives us the net, and then we plotted it month by month, and we have the USA in blue here, China in red, and they are on the same scales. So this is very, very comparable data. And what you see here, and what I did, because this starts in basically April, January to March, it's quarterly data basically. And so the reason I did that is because I wanted to show you these maximums where the US was always a supplier. Always. I couldn't find anything where the US was importing more gold from Switzerland than it was exporting to Switzerland to be refined. And then the Chinese importing from Switzerland. So we're giving it to Switzerland. It gets refined into these deliverable bars for an exchange, and they export to Switzerland. So to China, I mean. So basically, the US is part of the supplier to China, along with all of the other countries that are gold producers around the world. And then suddenly in 2020, March of 2020, and April and May, it all shifts, and China becomes our supplier. This had never happened before. Who had the power to get the Chinese exchanges to stop their deliveries of gold? And you saw that they were still delivering silver, and to get this whole thing to reverse. So we're talking about the China exchanges, and we're talking about the Swiss gold, the gold refineries around the world. Everything seemed to just go into reverse. And let me see here. I'm going to go back to these charts for a second just to show you. I mean, suddenly the U.S. had to accumulate, and I believe this is like $55 billion worth of gold that was accumulated in that short time to prevent this from going to zero. Now, this chart, this is 2021, 2020, this is 2020, 2021. This chart ends in 2022 when I was writing this chapter of the book. And so, it'd be interesting to see this chart updated and see how negative this would have gone because the amount of outflows, this line here today is down here already. And so things are starting to normalize. They're bringing back their fractional reserve scheme to run the commodities exchange with. But that fractional reserve scheme just about came back and bit them. So getting back to this is the quarterly data so it says 6/14 because that's when the data point ends. So April through June. And what you see here is we are, right here, I guess we had a tiny bit of import from Switzerland that exceeds our exports. But the net is almost always that we are a supplier and to Switzerland, and China is a customer of Switzerland, buying a lot. We supply a little, they buy a lot until the pandemic and the lockdowns. But the lockdowns didn't seem to have anything to do with it. So what I'm really asking here, I'm going to go a little further with this presentation, but I am working on some other very large projects that require a lot of my time. And I'm hoping that another investigative gold analyst, an investigative reporter that is also a gold analyst, and there's some great ones out there. So I'm talking to Ronan Manley and Alistair McLeod. These are some great analysts and reporters. They dig. And so I'm hoping somebody else will pick up the gauntlet here and dig into this further and find out just who has the power to get China to sort of shut down their demand and actually turn into a supplier, and also get the world's refineries to just reverse their flow suddenly so that there wasn't a force majeure on the COMEX, causing the gold price to spike to 3,000, 5,000, 10,000. Nobody knows where it would have gone had all of those traders that actually wanted delivery gone out to the retail market because they couldn't get it off of the COMEX. If they were forced to settle in cash, what would the price be? Nobody knows. So this is Nick Laird's website, Gold Charts Are Us. And this is the individual warehouse stocks. And so part of the evidence of who would be manipulating this lies in this data as well. And what we see here is Brink's Depository, and they are somewhat complicit in this as far as they had about, I don't know, what is this, 200,000 ounces of gold before this massive gold inflow. Now, the dark green is registered stocks. Registered is the gold that is already, in the registered category and is available to settle these, to deliver into these contracts. Eligible means that it's in the vault and the bars meet the standards of COMEX deliverable bars. So it's sitting there in the vault. This is ready to go. It's already in the category. So if somebody has sold a futures contract and the counterparty demands delivery, that is delivered. So, and then if we scroll down here, though, we've got the Delaware Depository. First of all, Brinks is not a bullion bank. They're a private depository that is contracted. So they're being used by somebody else as a vault to store this gold. Delaware Depository. Now, all these depositories, I believe they have to be within 30 miles of the commodities exchange. There's some rules. So there's only certain depositories that are eligible. They always had some. There's not all that much increase during the gold inflow months into the U.S. HSBC, there's a little bit here. What's interesting is look at how much is eligible being just held by like gold investors that aren't interested in delivering into futures contracts. You're talking about 5 million ounces. And then suddenly there's all this already registered on, against futures contracts. It's registered for delivery. And that is what flowed into their vaults, registered gold. Highly suspicious. HSBC is also one of the bullion banks. They do the trading, and they are one of the banks that is involved in setting the price. So that's their vaults. IDS of Delaware, not many ounces here. And they've been in it since 2017. Also, another private vault that's contracted by other people. JP Morgan. Now we're getting somewhere. From 1 million ounces to almost 15 million ounces, more than 14 million ounces, suddenly flows into their vaults. And they are a bullion bank that most likely has enormous trading desks in Hong Kong and in Shanghai, and they are dealing directly with the Swiss refineries. And so this, to me, is highly suspicious. Could these be the culprits? I mean, this is like investigating a murder case almost. And somebody needs to take this up. Nick Laird is very generous with his data, so you contact him. And he will supply this data most likely, if you're a good person. Loomis, another contracted private vault with, they are involved in this, but they probably have no knowledge of what's going on. Malka Amit, they are involved in this, small amounts, not that much. To MTB. This is suspicious because this is all registered already. There's just this tiny amount of eligible, but all registered against futures contracts suddenly floods into their vaults. Scotia Makata. Now, this is interesting because, there's a gold fix that has happened for years and years and years, and fix is the appropriate term. But a panel of several of the bullion banks would sit around at desks in a room and discuss things, and knowing the prices that things are trading for on exchanges, and then they would set an AM and a PM price for gold. And all of the small dealers, that was the price they worked off of for the entire day until the price only changed twice a day, AM, PM, instead of every single minute. And so it's much easier for somebody that's got physical inventory, a little coin dealer or something, to operate off of the fix rather than the minute by minute changing COMEX price. But when all of this happened, it looks like Scotia Makata said, they resigned their seat on the gold fixing board. And anybody that's on the gold fixing board, they have an advantage. They know a few minutes before the price is set, what the price is going to be. And if the price is a little bit above or below that, there's an opportunity there to go long or go short and scrape up a few basis points here and there that are guaranteed. And so it's like insider information. And Scotia Makata said, well, you know what? We don't want any part of this because we might get busted in the future, is my speculation. They just didn't want to be involved in it anymore. So that is basically the whole story on this gold manipulation that is the most blatant manipulation in history that anybody can see if somebody digs into the data. I've done a lot of work here digging into this data. Alan Hibbard helped me out with a lot of it. Watch his video on gold flowing from west to east. And then somebody, Alistair, Ronan, somebody out there, please pick this up and run with it. I would really love to see who is the guilty party here, who is the biggest gold manipulator in history. And, what do people think would have happened if the COMEX had declared a force majeure and had no gold to deliver? I want to thank you for watching, and we'll see you next time.
Thanks for watching, but this is by no means the whole story. If you want the full story, including my free online-only chapters and companion videos, there's a wealth of information at ggsr21.com. Thanks.